We turn our attention to York Timbers now. York Timber Holdings is a forest product enterprise, and its core business is sawmilling and commercial forestry from its operations in Mpumalanga. York Timbers has got a market cap of 1 billion rand, price earnings of 19.4 and a dividend yield of 0, not paying dividends. This is a small cap player, Chris, in a very, very tough industry. I mean, timber is a tough business to be in. They're processing their own timber. You've got things like drought, you've got things like fires, you've got demand down. And it seems to me that a lot of their business hinges critically on what's happening in the construction sector. And with construction being what it is, things are not likely to be looking good for York Timbers anytime soon.
Rafilo, I think you've hit it right on the head there. It's a very, very difficult business. It's a difficult business to analyse at the best of times. But I mean, a couple of years ago, they had a kind of fair value adjustment in there that made things look a bit more difficult, in fact, to actually analyse in the last set of results we had. As you rightly say, they've had their fair share of fires, this type of thing. So it makes an intrinsically difficult business even more difficult to analyse. It's very much under the radar. Look, until fairly recently, until a few years ago, this was a company that won accolades for providing the best annual reports, AFSs in the industry. And it's changed now, you know, with the demise of Solly Tucker. It's now owned by a bunch of Canadians. And I think it's fallen off the radar screen. I think the people are less inclined to look at this one. I think perhaps for some of the reasons we've mentioned there. It's a difficult industry and compounded by some of the difficulties in actually analysing it.
Well, what about some of the other uses for its timber then, Viv? I mean, could they not be selling wood to mining to hold up the mine shafts? What else can they do? I know last week on the show we spoke about SEPI, and we know that pulp, being what it is not a very viable option for someone like York Timbers. But is there anything else that they can do to find alternative uses for its timber and perhaps just slightly to start gaining some profits from the sale of the timber?
Look, I'm not an engineer, so I wouldn't be able to give you much advice on what their mining engineers could be doing. But that being said, as Chris mentioned, it's a company that's, I know I spoke to some of our traders, they were saying they hardly ever look at it because it's just so difficult to trade the stock. It's just, you know, the movements are just so erratic and it's just very difficult to actually trade it. It's fallen dramatically over the last month or so. I think it's from the end of July, it's come down about, I think, 19%. And as mentioned by Chris as well, the new valuation method they're using is the biological valuation method or whatever. For instance, the operating profits they're saying is going to be up over 400%, but yet earnings per share is going to be dropping by about 50%. And this is because of the strange valuation method that they adopted a few years ago. And that's obviously very hard for an analyst to look at and say, okay, what do we really do? Are we looking at earnings per share dropping so much? Are we looking at the operating profit, you know, it's been going up 5 times? How do you analyze a stock? Where do you think it's going to go for the future? So I'm a bit nervous with something that I just can't get a clear idea about.
Well, with risks like fire are insurable risks, but things like drought and a fall in demand are nothing you can control. And there's another issue now with the Department of Water Affairs having quite onerous water requirements, saying that existing forested land is fine, but going into the future, they're not going to be allowing as much. And these trees are water hungry. So with the Department of Water Affairs not giving rights, how far are they with that discussion? Is it likely to change? Do you think that York Timbers can mitigate this in any way?
Look, I haven't followed that particular argument, quite frankly, I've got to admit that. But I've got to say that some of the companies that have in the past have had, you know, their way with some of the natural resources of the country, you know, in terms of water, resources, etc., are finding that the government recently has been cracking down a bit on that. So I would not expect them to have much more success going forward, especially when it considers just how, you know, hungry for some of the resources the communities are going to be, and the kind of demands that have been placed. As you mentioned, trees are quite water hungry, so I don't expect them to have much more, you know, access in the future than they're currently having right now. And as you mentioned, it might just be decreasing by quite a bit.
Well, Chris, the one thing that could be in their favour is the value of their land, but we're not talking prime property in Sandton, we're talking rural land in the middle of Mpumalanga. So is there even hope for that as far as the value of the land is concerned?
I don't think so. As you rightly say, this is something that's been demarcated specifically, you know, for growing trees. And it's great for growing trees, but for any other possible thing, this is not like Tongaat, you know, on the north coast of KZN. You know, using their land for residential and commercial properties. No. As you rightly say, it's difficult to see. Trees. Yeah, it's very difficult.
Doesn't sound like you gentlemen are very optimistic on York Timbers. I'm guessing that it's not going to be hot for either of you. Chris, shaking your head.
Can't get enthusiastic about this one at all.
Not at all. Viv, do you echo the same sentiment?
Yes, I agree.
Shall we move on to your stock picks then? Perhaps you'll have more positive news to say, a little bit more. Viv, you have chosen Richmond. Tell us why.
Look, I mean, the luxury sector obviously has been, people think, you know, there's a recession, the luxury sector is something they should pull back from. But strangely enough, in the current downtimes we've seen globally, the luxury sector has been one sector that's done quite well. And I was just like, you look at some of the kind of the products we look at, people have luxury goods such as yachts, watches, whatever it may be, even very expensive handbags as we were discussing before, have been doing extremely well. And the reason is that the world economy is effectively becoming a dumbbell economy. There's very little middle class in play. There's a lot of very poor people and a lot of very wealthy people. You could argue that's tax reasons, that's regulatory reasons. You could argue it's the fact that we have a globalized economy, therefore rare skills are being rewarded by more. Whatever the reason may be, the wealthy are remaining quite wealthy. They're doing extremely well over the last few years. And also, I think that people don't realize this, but if you look at, for instance, even a country like China and India, one of the things that Western companies have a great advantage in is the fact that they still have the cachet of them being the luxury brands. So Italian brands, foreign brands, Swiss watches, etc., are going to have a larger cachet in China, no matter how good the quality, no matter how entrepreneurial a local Chinese maker is going to be. He's never going to have the cachet of a Rolex, of a Mont Blanc, etc. And so what you're going to see basically is that as these economies in China and India grow, demand for luxury goods, especially Western luxury goods, are going to do quite well. So I'm positive on the company from a number of reasons. Also, in the recent downturn we saw, the company was trading around 36 last week. It's gone about 40 today. But it did offer a great deal of opportunity, and I would be buying the stock on any kind of pullback.
Ordinarily, I'd be asking my co-host Simon Brown how he feels about the guest stock pick. So, Chris, I'll have to ask you on your opinion on Richemont. Is it hot? Is Viv right to say that it's a stock pick?
We love it. We've had it as a core holding for a long, long time. And yeah, no, it's hot. And for all the reasons that Viv has described. Yeah, no, we like it.
Well, let's turn our attention to your stock pick now. You've chosen Datatec. Tell us why.
Some months ago, we actually bought Datatec. We'd been looking at it for about 2 years. We'd always wanted to get into an IT stock. One of the problems we have is that we can't really go into very small stocks. But we have to keep relatively tradable, relatively large market cap stocks. But Datatec had been coming up on our radar for quite a while. So we looked at it, and we realised that earnings growth is going to be really quite exemplary. And I think the results are out coming for the half year, coming out on Wednesday, if I'm not mistaken.
Yes.
And the PE on Datatec is going to come down from about 22 to about 11. And that's for the kind of growth that I think is probably going to be sustainable from a company like Datatec. They've done all the right things in recent years. It's something that, for our purposes at least, actually looks very, very good indeed.
Viv, your take on Datatec. I know I would be asking Simon Brown. Do you have anything else to add? Is Chris right to say that it's a hot stock?
Look, we don't look at it primarily because it's quite a small company, and we try and keep our portfolios in the top 40, just for tradability, etc. But that being said, as you mentioned, it is going to show a good improvement, and it is good to have some kind of tech exposure, and especially in an economy where everything is basically financials and resources. It's good to have some kind of diversification, and Datatec is one of the few tech companies out there that you can actually play.
And relative to some of the other tech companies, someone like Altec specifically, how would Datatec measure up, Chris? Okay,
maybe slightly different kind of flavour to Altec. I think you've probably got to compare it with some of the smaller stocks in there, the likes of an EOH, Datacentric, that type of thing. It's much bigger. In fact, it's probably the biggest of the tech stocks that are actually left on the market with the departure of Dimension Data earlier this year. So, I think its prospects look incredibly bright. It hasn't been a wonderful performer up until fairly recently, but now I think they're getting all their ducks in a row now. As I say, we've been looking at it for the past couple of years and have been looking for all the reasons to get it, and we found it this year.